Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. So let us continue. This is lecture number 7. In the previous lecture, we had started with the written down value method of depreciation. So we are continuing with the same method, that is WDV method. Let's begin with an illustration. Illustration. Just write on 1st April 2015, X Limited purchased a machinery for rupee 58,000 and spent rupee 2,000 on its erection. On its erection. On 1st October, on 1st October 2015, an additional machinery costing rupee 20,000 were purchased. Were purchased. On 1st October 2017, the machinery purchased on 1st October 2015 was sold for rupee 28,600 and on the same date and on the same date a new machine a new machine on the same date a was purchased new machine was purchased at a cost at a cost of rupee 40,000 of rupee 40,000. I believe you understood this. Now let's write what is required in the question. Required show the machinery account for the first 4 years ending 31st March as per written down as per written down value method, as per written down value method, taking the rate of depreciation, rate of depreciation, taking the rate of depreciation at 10% per annum, at 10% per annum. I believe you understood the question. I believe the question is crystal clear. Let us start with its solution. Let us try to solve it. So basically, over here on 1st April 2015, there is a company X Limited which purchased a machinery for 58,000 and spent 2,000 on erection. That means this 2,000 is to be capitalized and the total value of machinery would be 58 plus 2, that is 60,000. I believe it is clear. On 1st October 2015, an additional machinery costing 20,000 was purchased. On 1st October 2017, the machinery which was purchased on 1st October 2015 was sold for 28,600. So first of all, what we need to do, we need to calculate the depreciation from 1st October 2015 to 1st October 2017. We need to calculate the depreciation. After that, we will calculate the WDV, written down value, and then we'll try to find out whether this machine is sold on profit or on loss, whether there is a profit on sale of machinery or there is a loss on sale of machinery. On the same date, a new machine was purchased at a cost of 40,000. On the same date, a new machine was purchased at a cost of 40,000. So in this case, the machine, the three machine case, machine 1, machine 2, machine 3. Machine 1 is purchased on 1st April 2015, machine 2 is purchased on 1st October 2015, and machine 3 is purchased on the 1st October 2017. I believe it is clear. We have to make machinery account for the first 4 years. The accounting year starts from 1st of April every year and it ends with 31st of March. We need to follow the written down value method over here, and the WDV, the depreciation rate, is 10% per annum. The rate of depreciation is 10% per annum. In WDV method, we have already learned how to find out the depreciation rate in the previous classes. Let us continue and try to make machinery account. Machinery account. Draw this format: date, particulars, amount in rupee, date, particulars, amount in rupee. First April 2015. First April 2015. A machinery is purchased. Machine 1. Machine 1. 58,000. 2000 is charged for erection. So 1st April 2015 to bank account, erection charges, erection charges, erection charges 2000. We have to calculate depreciation on this machinery by depreciation by depreciation. The date is 31st March 2016. Depreciation machine 1 60,000 multiplied by 10%. 60,000 multiplied by 10% into 12 by 12. 6,000. 6,000. I believe it is clear. We have also purchased the machinery on 1st October 2015 to bank account machine 2 to bank account machine 2 20,000. 20,000. Just see it over here. On 1st October 2015, additional machinery costing 20,000 is purchased. So we need to also calculate depreciation on this value 20,000. So machine 2, 20,000, 10%, 6 by 12, which is 1,000. I believe it is clear, which is 1,000. Now let us find out the closing figure. By balance carried down, total, it is 80,000 over here. 80,000. Same on the credit side, 80,000 total. By balance carried down, machine 1, machine 2. Machine 1, machine 2. Machine 1, it is 60,000 minus 6,000, 54,000. Machine 2, 20,000 minus 1,000 is 19,000. I believe it is clear. The first year is clear, that is 2015. We need to make the account for 4 years. Let's stretch these lines. First of April 2016, opening figure will be 54,000 for machine 1 and 19,000 for machine 2. We will write to balance brought down. To balance brought down, machine 1, machine 2. Closing date 31st of March 2017. 31st March 2017. By depreciation. By depreciation account. Machine 1, machine 2. Machine 1, machine 2. Machine 1, it is 54,000 multiplied by 10%. multiplied by 12 by 12. It is 5400. Calculate for machine 2. It is 19,000 multiplied by 10% multiplied by 12 by 12. 1900. 1900. 1900. By balance carried down. By balance carried down machine 1. Machine 2. 54,000 minus 5400. 54,000 minus 5400. 48,600. 48,600. For machine 2, 19,000 minus 1900. 19,000 minus 1900. 17,100. Let's make the total 54,000 plus 19,000. 54,000 plus 19,000. Total is 73,000. 73,000. I believe you understood. So we have made this account for 2 year 2015 and 16. Let's make it for 17 now. Stretch these lines. Opening balance 1st of April 2017. To balance brought down. To balance brought down. Machine 1, machine 2. Machine 1 is 48,600. Machine 2 is 17,100. We have also purchased a machine in this year on 1st October 2017. We have purchased a new machine. So to balance brought down to bank account. Over here, to bank account will come. To bank account, new machine purchased, that is machine 3. Amount is 40,000. Amount is 40,000. Let's calculate the depreciation. We have sold this machinery for 1st of October 2017 by bank account. Machinery sold. We have sold it for 28,600. We have sold it for 28,600. We need to calculate depreciation. By depreciation, 48,600 multiplied by 10% multiplied by 6 by 12. Solve it. Solve it quickly. 2,430. 2,430. We also need to calculate the profit or sale of loss. Profit or loss on sale of this machinery. So let's calculate the profit or loss first. Let's calculate the profit or loss first. Leave some space like half a page and write working note. Working note. Calculation calculation of profit oblique loss on sale of machinery. Sale of machinery. Write original cost. Original cost of machinery is 60,000 less depreciation. Depreciation for first year we need to calculate. Depreciation for first year is 10%, which is 6,000. Value is 54,000. Again we need to calculate depreciation for second year. Less depreciation. Depreciation for second year. Depreciation for second year 5,400. It is 48,600 till over here. For the third year, half a year, we need to calculate depreciation. So write less depreciation up to date of sale. Up to date of sale. So 48,600. 48,600. 48,600 multiplied by 10%. 48,600 multiplied by 10% multiplied by 6 by 12, it is 2430. It is 2430. Deduct this amount. 48,600 minus 2430 is 46,170. 46,170. This is book value. This is book value as on date of sale. Book value as on date of sale. Now we need to less sale proceeds minus sale proceeds. 28,600 loss of 15,000. 17,570 loss on sale. Loss on sale. I believe you must have understood this. Let us move ahead and write over here. Write over here loss on sale. Loss on sale. So we will write by profit on loss. Profit and loss account. Loss on sale. Loss on sale. 17,570. 17,570. We will calculate depreciation now by depreciation account on machine 1 and machine 2. Machine 1 and machine 2. Now we will calculate depreciation on machine 2 and machine 3 because machine 1 is already sold. The depreciation is already calculated on machine 1, so machine 2 and machine 3 we need to calculate. The value of machine 2 is 17,100 and so depreciation at the rate of 10%, 1710. 1710. Depreciation on machine 3 needs to be calculated. 40,000 multiplied by 10%, 4,000, multiplied by 6 by 12, 2,000, multiplied by 6 by 12, this value of 2,000. So 40,000 multiplied by 10% multiplied by 6 by 12 is 2,000. I believe you must have understood this 2,000. Let us stretch these lines a bit. By balance carried down, by balance carried down, machine 2 and machine 3, machine 2 and machine 3. For machine 2, it would be the value of the machine, that is 17,100 minus 1710. So this figure is 15,390. Machine 2, 17,100 over here, from the value of depreciation needs to be deducted. So 1710, 15,390. For machine 3, it is 40,000 and minus 2,000 for depreciation on machine 3. So the value of machine 3 is 40,000 minus 2,000 is 38,000. 38,000. Let's do the totals now. Let's do the totals. 48,600 plus 17,100 plus 40,000. 48,600 plus 17,100 plus 40,000 equals 1,05,700, equals 1,05,700. 1,05,700. Let us move a bit more ahead and calculate for year 4. Do the calculations for year 4. The last year that has been asked in the question. Let us write to balance brought down amount first. The date is 1st April 2018. To balance brought down. To balance brought down. Machine 2 and machine 3. Machine 1 is already sold. So machine 2 and machine 3. Machine 2, 15, 13, 390, 15, 390. Machine 2, 38,000. Let's calculate the depreciation. 31st of March 2019 by depreciation. By depreciation, machine 2 and machine 3. Machine 2 and machine 3. So machine 2, 10%, 15,390, so 1539 multiplied by 10%, and 3800, 10% is 3800. I believe you understood till here. I believe you understood. Let us calculate the closing figure by balance carried down. By balance carried down, machine 2 and machine 3. Machine 2, machine 3. 13851 and 34200. 15,390 minus 1539 equals 13851, and 38,000 minus 3800 equals 34,200. Let's quickly make the totals. 53,390 53,390. 53,390 over here and 53,390 in the credit column. I believe you understood. Okay, so we are continuing. Let's write one more illustration. We are continuing. Let's write one more illustration. Illustration. A Limited provides you the following information. A Limited provides you the following information. On 1st April 2015, purchased purchased 10 second-hand 10 second-hand machines for rupee 9 lakh for rupee 9 lakh incurred incurred rupee 70,000 incurred rupee 70,000 towards freight and insurance towards freight and insurance rupee 20,000 towards rupee 20,000 towards towards carriage inward residual value rupee 4,09,600 residual value rupee 4,09,600 and useful life is 4 years. Useful life is 4 years. I believe you must have understood this. Purchased 10 second-hand machines for 9 lakh, incurred 70,000 towards freight and insurance, rupee 20,000 towards carriage inward, residual value 4,09,600, useful life is 4 year. Okay. On 1st January 2016, on 1st January 2016, incurred rupee incurred rupee 7,000 towards repairs and rupee 3,000 on installation of machines and rupee 12,000 and rupee 12,000 towards rupee 12,000 towards annual insurance premium insurance premium, and and commenced the commercial production, commenced the commercial production, commenced the commercial production. Let us continue. On 1st of October 2016, on 1st of October 2016, 1st of October 2016, sold sold one machine, sold one machine at a profit of 10%, at a profit of 10%. On 1st January 2017, on 1st January 2017, incurred incurred rupee 10,000 on on repairs of machine, on 1st January 2018, on 1st January 2018, sold one machine, sold one machine at a loss, sold one machine at a loss of 10%, loss of 10%, and purchased a new machine, purchased a new machine for rupee 90,000, for rupee 90,000, and and spent rupee 10,000 on its installation, on its installation. What is required in the question? Required, required, prepare, prepare the machinery account, prepare the machinery account for 3 financial years, for 3 financial years, using written down value method, written down value method. Let us make machinery account now. Let us make machinery account on the basis of this question. Solution, solution. Machinery account, machinery account. Date, particulars, amount, date, particulars, amount, date, particulars, amount in rupees, date, particulars and amount in rupee. On 1st of April 2015, a machinery is purchased. 10 machinery were purchased, second-hand machineries, 9 lakh in total. 9 lakh in total. My dear students, if you could see the question properly, if you could just see the question properly, 70,000 is incurred toward freight and insurance, 20,000 towards carriage inward, residual value is 4,09,600. The useful life is given, that is 4 years. We have incurred 7,000 towards repair and 3,000 on installation of machine and 12,000 towards annual insurance premium. We have sold one machine at a profit of 10% on this date, 1st October 2016. After 1 year, after 6 months, 1 year, 1st of January 2017, we have incurred 10,000 rupees on repairs and machines. And then 1st of January 2018, we have sold a machine at a loss of 10% and purchased a new machine for 90,000 and spent 10,000 on its installation. In this question, the rate of depreciation is not given. If you could just see properly, the rate of depreciation is not given in the question. So before starting the question, we should calculate the rate of depreciation. So just write over here, working note number 1. Working note number 1, calculation of rate of depreciation. Calculation of rate of depreciation. Rate of depreciation. All of you know the formula. Just write the formula for calculation, the WDV depreciation rate. WDV depreciation rate equals 1 minus scrap value, that is residual value, divided by original cost, divided by original cost and time. So time is 4 year in this question, so we will write 1 by 4. So 1 minus scrap value is 4,09,600. Original cost is 10 lakhs. Original cost is 10 lakhs to the power 1 by 4. How you will solve it? Keep your calculators ready. I'll help you to solve it. Kindly type on your calculator 4,09,600 divide by 10 lakh equal to 4,09,600 divide by 10 lakh equals to, the figure that is flashing on your calculators is 0.4096. I repeat, 4,09,600 divided by 10 lakh equals to, the answer is 0.4096. This figure is there on your calculator screen. Now press 2 times under root. So on your calculator there would be a sign under root x. Under root x. Kindly press 2 times under root button. When you pressed 2 times under root button, you got a figure that is 0.8. You got a figure that is 0.8. So this means this is 0.8 equals 1 minus 0.8, that means 0.2. It is 20%, equal to 20%. So the WDV depreciation rate is 20%. I believe all of you understood this. So my dear students, generally root is half. Over here we need to do 1 by 4. So we pressed 2 time roots. Generally root is half. If it is 1 by 4, so half, so we have to press 2 times root. If we need to calculate 1 by 8, in that case we will press 3 time roots. If we need to calculate 1 by 16, we will press 4 time roots. I believe you understood. Do it once again. 4,09,600 divide by 10 lakhs. After that, equal to 4,09,600 divided by 10 lakhs equal to whatever we got on our calculator. Now press 2 times under root. Press 2 times under root. When you pressed 2 times under root, you got this figure 0.8 on your calculator. So 1 minus 0.8 is 0.2, that is 20%. Now learn the long method that you have learned for 7 years, for 9 years, for 5 years, because over there in that method this root thing will not work. This root method will not work when you need to calculate 5 years or 7 years or 10 years. In that case what we can do is we can use that long formula for solving this question also, or finding WDV depreciation rate for 4 years also. This is possible. Okay, so let's continue. I'll help you to solve the same question using that method also. So again type 4,09,600 on your calculator, divide by 10 lakh. 4,09,600 divide by 10 lakh equal to the figure that you got on your calculators is 0.4096. 0.4096. Now what you need to do, press 12 times under root. Press 12 times under root. 1 time under root, 2 time under root, 3 time under root, 4 time under root, 5 time under root, 6 time under root, 7 time under root, 8 time under root, 9 time under root, 10 time under root, 11 time under root, 12 time under root. We have pressed 12 time under root. Step 1 is over. Step 2, minus 1 equal to, you have to do minus 1 equal to 3 buttons. Minus 1 equal to, done. Step 2 is also done. On your calculator the figure must be showing minus 0.000217888989. Please check along with me. Step 2 is over. Step 3, divide by power. Step 3, divide by power. Over here it is 4 years, so divide by 4. Divide 4. Step 3 is over. Divide 4. Step 4 now. Plus 1 equal to. In step 4, you need to do plus 1 equal to. So plus 1 equal to. Step 4, plus 1 equal to. On your calculator, 0.9999455275 must be flashing. Please check. 0.9999455275 must be flashing on your calculators. The last step, that is fifth step, is multiply equal to into equal to 12 times we need to do. We need to do into equal to 12 times. That is multiply equal to 12 times. Kindly do along with me. Into equal to first time, into equal to second time, into equal to third time, into equal to fourth time, into equal to fifth time, into equal to sixth time, into equal to seventh time, into equal to eighth time, into equal to ninth time, into equal to 10th time, into equal to 11th time, and into equal to 12th time. So students, on your calculator the number that is flashing is 0.8000151456 6608. I repeat, 0.80001456,608 must be flashing on your calculators. That means 0.8. Simply that means 0.8. So again, how you will solve it? How you will solve it now? So 0.8. So 1 minus 0.8, you will get 0.2, that is 20%. So this formula which I just taught you, this will work in case of 1 by 2, 2 year, 4 year, 8 year, 16 year. This formula will not work in all the cases. But the long formula that I had taught you will work in all the cases, whether it is 3 years, 5 years, 4 years, 6 year, 8 year, 10 year, any year. I believe it is clear. Yes. Now we'll try to make we try to make machinery account now, because we have already calculated the depreciation rate using WDV method. So let's begin with the machinery account now. So 1st of April 2015, we have purchased a machine. So to bank, we have purchased 10 machines and the total value is 9 lakhs. The total value is 9 lakh. On the same day, we have incurred certain expenditure on that. That is 20,000 towards freight and insurance, 70,000 towards freight and insurance, and 20,000 towards carriage inward. The date is same, 1st April 2015. To bank account, 70,000 plus 20,000, 70,000 plus 20,000, that is 90,000. Now on 1st of January 2016, 1st of January 2016, two different expenses, that is 7,000 and 3,000 is incurred. 7,000 towards repair of machine and 3,000 towards installation of machine. This needs to be capitalized, but 12,000 towards annual insurance premium would not be capitalized over here. So let us capitalize these two expenses. So we will write over here to bank. We will write over here to bank account 7,000 plus 3,000. 7,000 plus 3,000, that is 10,000. So 90,000 plus 10,000 plus 9 lakh, that is 10 lakhs. On this figure only we have calculated the depreciation. 10 lakhs, the depreciation rate. Now at the year end 31st March 2016, 31st March 2016, we will calculate the depreciation. So by depreciation, 10 lakhs, 10 lakhs multiplied by 20%. So 20 by 100, 10 lakhs multiplied by 20%. So 20 by 100. And over here only 3 months depreciation will be calculated. Only 3 months depreciation will be calculated. Why? I'll tell you. See students, over here you had seen that we have purchased the machinery in the month of April, but it is put to use in the month of January, the next year January, 1st of January 2016. The machinery is put to use, that means installation is actually done in the month of January 2016. So January, February, March, only 3 months depreciation needs to be calculated. So 10 lakhs multiplied by 20 by 100, 20% multiplied by 3 by 12, it is 50,000. It is 50,000. Calculate the balancing figure. So over here it is 10 lakh and balancing figure is 9 lakh 50,000. The balancing figure is 9,50,000. We will write by balance carried down, by balance carried down. Understood? Let us move ahead, stretch these lines a bit. Let us move ahead, stretch these lines a bit. It is 9,50,000 over here. It is 9,50,000 over here. To balance brought down. To balance brought down. The date would be opening date 1st of April 2016. To balance brought down. To balance brought down 9,50,000. On 1st October 2016, one machine sold for a profit of 10%. On 1st October 2016, one machine sold for a profit of 10%. So we need to calculate depreciation because we want to sell this machine. So we will calculate depreciation for 6 months. We will calculate depreciation for 6 months. Quickly do it. So 9,50,000 is the value of 10 machines. We have sold only one machine. So the value would be 9,50,000. 9,50,000 divide by 10. So per machine value is calculated. That is 95,000 per machine value. Value of one machine. Value of one machine that we have sold. Okay. Now we have to calculate depreciation for one machine only. So 95,000 multiplied by 20% multiplied by 6 by 12. 1st April 2016 to 1st October 2016. This is 6 months. So multiplied by 6 by 12 equals to 9,500. Equals to 9,500. On this date we have sold this machine. So kindly record sale by bank account. By bank account, that is money received. How much money must we have received? 95,000 minus depreciation, that is 9,500. So 95,000 minus 9,500, do it on your calculators. 95,000 minus 9,500, that is 85,500. 85,500 plus 10%. Plus 10%. So this is plus 10%. So this is 85,500 plus 10% of 85,500. Total is 94,050. 94,050. 94,050. That is, the total is 94,050. I believe it is clear to both all of you. Okay. Now we have made a profit of 10%. That profit needs to be recorded over here. Because we have made a profit of 10% on this sale, we need to record that profit over here. Okay, so let us record that profit. On the debit side, just write to profit and loss account, and it is profit. To profit and loss account, it is profit. Loss is recorded on the credit side, profit is the recorded on the debit side. So 95,000 minus 9,500, 95,000 minus 9,500 multiplied by 10% is the profit. So if you deduct this, you will get 85,500. 85,500 multiplied by 10%. That is 8550. 8550. Understood? That is 8550. I believe everyone is clear. Let us continue. Let us continue. Now, what we'll do is we'll record the depreciation for remaining 9 machines. So the value of 10 machines was 9,50,000. We need to record depreciation for 9 machines. So 9,50,000 minus 95,000, because this machine is sold already. This machine is already sold. So 9,50,000 multiplied by 95,000 multiplied by 20%, that is the rate of depreciation for the whole year, that is multiplied by 12 by 12. Let's do it. Let's do it. Right over here, by depreciation, year end. So 31st of March 2017, this is year end. By depreciation, it is 9,50,000 minus 95,000. So it is 855,000. Do it on your calculator. 9,50,000 minus 95,000, that is 8,55,000. So this 8,55,000 multiplied by 20% multiplied by 12 by 12. So multiplied by 20% multiplied by 12 by 12. So this is 1,71,000. The depreciation value is 1,71,000. 1,71,000 is the depreciation value. Now what we need to do is, we will calculate the balancing figure, that is balance carried down. So first of all, do one thing, just make a total of these two figures. 9,50,000 plus 8,550. 9,50,000 plus 8,550. So the total over here is 9,58,550. 9,58,550 minus all these figures. So 9,58,550 minus 9,500 minus 94,050, 94050 minus 171,000. What we get is, the figure we get is 6,84,000, and this is the balancing figure. So we will write by balance carried down. What we will write? By balance carried down. I believe you understood till here. What we will get is by balance carried down 6,84,000. So we have done the accounting for 2015. We have also done the accounting for 2016. Now let us do the accounting for the third year, that is 2017-18. Stretch these lines a bit. Stretch these lines. This 6,84,000 will come here as opening value, opening figure. The date will be 1st of April 2017. 1st of April 2017. To balance brought down. To balance brought down 6,84,000. To balance brought down 6,84,000. To balance brought down 6,84,000. So this is 2017. We have incurred we have incurred an expenses over here on 2017. This is revenue in nature. So incurred 10,000 on repairs of machines. Incurred 10,000 on repairs of machines. Sold one machine at a loss of 10% and purchased a new machine for 90,000 and spent 10,000 on its installation. Understood? So let's continue. Let's continue over here. On 1st of January 2018, 1st of January 2018, a new machinery is purchased for 90,000. New machinery is purchased for 90,000. New machinery purchased. New machinery purchased. This is purchased for 90,000 and we have incurred 10,000 for installation. We have incurred 10,000 for installation. So this needs to be capitalized. This installation of 10,000 needs to be capitalized. Now we have sold the machinery on this date. We have also sold the machinery on this date, that is 1st of January 2018. So we need to calculate depreciation. We need to calculate depreciation. We will write by depreciation account. We will write by depreciation account. We need to calculate depreciation for one machine. So 6,84,000 is the value for 9 machines. So 6,84,000 divided by 9 machines equal to 76,000. This is the value of one machine, 76,000. So 76,000 multiplied by 76,000 multiplied by 20%, 20 by 100 multiplied by 9 by 12, multiplied by 9 by 12. That is 1st of April 2017 to 1st of January 2018. For 9 months, 76,000 multiplied by 20%, that is 20 by 100 multiplied by 9 by 12. So this figure is 11,400. This figure is 11,400. Now we have sold this machine, and we have sold this machine basically at a loss of 10%. At a loss of 10%. And we have calculated the depreciation also. We have calculated the depreciation also. So we will calculate the selling price now by bank sale. By bank sale. So 76,000 minus depreciation, that is 11,400. 76,000 minus depreciation, that is 11,400. This is the real value minus 10%. Minus 10%. Do it on your calculators. 76,000 minus 11,400 is 64,600. 64,600 minus 10%. Minus 10%. This is 58,140. 58,140. 58,140. 140. Have you understood? Have you understood this? Yes. Let's continue. Let's continue. 58,140. So we have calculated the depreciation, we have calculated the sale price. Now we need to calculate the loss. We need to calculate the loss. Stretch these lines a bit. We need to calculate the loss now by profit and loss account. This is loss. By profit and loss account, this is loss. So we have calculated the value of this machine, that is 76,000 minus 11,400. The loss is 10%. So multiplied by 10%. So this is 64,600 multiplied by 10%. So loss is 6,460. So the loss is 6,460. I believe it is clear. The loss is 6,460. The accounting for sale of machinery is done over here. Now we need to calculate the depreciation for the remaining machinery, that is 8 machinery. So for depreciation 6,84,000 minus 76,000. So depreciation is to be calculated for 6,08,000. The value is 6,08,000. Just write the closing date 31st of March 2018. We will write by depreciation account. We will write by depreciation account. By depreciation account. Right. Calculate on old machine. So we will calculate on old machine first. Old machine first. Old machine first. So it is 6,84,000. One machine is sold and its value is 76,000. So we will deduct this value. What value will get is 6,08,000. The value you get is 6,84,000, 6,08,000. The value what we get is 6,08,000 multiplied by 20%. Multiplied by 20% for the whole year. For the whole year, depreciation needs to be calculated for the whole year, which comes to 1,21,600. 1,21,600. Stretch these lines a bit. 1,21,600. Now calculate depreciation for the new machine. Calculate depreciation for the new machine. So for the new machine, we have purchased the new machine for 90,000 and 10,000 is the installation charges. So it is 1 lakh, 1 lakh multiplied by 20% multiplied by 3 by 12. So depreciation needs to be calculated for 3 months only, because we have purchased new machine in the month of January 2018. 1st January 2018. So from 1st January 2018 to 31st March 2018, it is only 3 months. It is only 3 months. So 1 lakh multiplied by 20% multiplied by 3 by 12 is 5,000. Is 5,000. Make a total. Make a total over here. Make a total over here. On your calculator, 6,84,000 plus 90,000 plus 1 plus 10,000. 6,84,000 plus 90,000 plus 10,000. It's 7,84,000. 7,84,000. 7,84,000 minus 11,400 minus 58,140 minus 6,460 minus 1,21,600 minus 5,000 equals, that equals 5,81,400. 5,81,400. Do the bifurcation for new machine and old machine. So right over here, by balance carried down. By balance carried down, old machine and new machine. So we'll do old machine, we'll do first for old machine. For old machine, so for old machine it is 6,84,000 minus 11,400 minus 58,140 minus 6,460 minus 1,21,600 equals for old machine it is 4,86,400. For old machine it is 4,86,400. Let us calculate for new machine now. So for new machine it is 1,90,000 plus 10,000, it is 1 lakh minus depreciation, that is 5,000. So it is 95,000. It is 95,000. 4,86,400 plus 95,000 equals 5,81,400. That is 5,81,400. Let's write, if we have done till here, just see the question once more. See the question once more and let's conclude it. So this was a long illustration. This was a long illustration. We need to purchase machinery account over here, and we have purchased machinery account. We have seen calculating the rate of depreciation using the simple method, but this method is only applicable for these many cases, that is 1 by 2, 1 by 4. So over here the 4-year case was there, and that is why we were able to calculate it, right? So let's do one thing, write a normal calculation and write the steps for the normal calculation of rate of depreciation. Just write over here working note, working note, working note, steps to calculate, steps to calculate the rate of depreciation, the depreciation rate, steps to calculate the depreciation rate in this question. So in this question, WDV depreciation rate, WDV depreciation rate, which is calculated. So 1 minus, just see the values over here, 4,09,600, 4,09,600 divided by 10 lakhs, divided by 10 lakhs to the power 4 years, so 1 by 4, to the power 4 years, so 1 by 4. So 1 minus this value needs to be calculated, which is 0.8. So write on your calculator step 1. Step 1, what you will do, first of all you will solve this. So you will write on your calculator 4,40,9600 divide by 10 lakhs, which is equal to 0.4096, which is equal to 0.4096. Over here step 1 is 12 times under root. You will do 12 times under root. Then step 2, what you will do is minus 1 equal to. What you will do, minus 1 equal to. Then the step 3, in step 3 what you will do is divide by power. Divide by power. So over here the power is 4. So we will be dividing by 4. I believe you understand. Now step 4. Now step 4 plus 1 equal to. Step 4 plus 1 equal to. And at last you will do step 5 into equal to, but you will do 12 times. Into equal to, you will do 12 times. The figure you will get is 0.8. So over here the remainder is 0.2, which is 20%. This is nothing but the WDV, depreciation rate. I believe it is clear to all of. I believe it is clear. Fine. So we are stopping here. We are stopping here and we'll continue from here in the next class.